Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be joined by Artur Luhaäär, COO and co-founder at Multi.io. Artur, thanks for joining me.
Hey, glad to be here.
Now, first off, you want to give our audience a little bit background about who you are and kind of how you got into blockchain?
So originally I'm from Estonia, which is what kind of explains my kind of out there last name. I founded a fintech startup in Singapore. I'm still based in Singapore, and then I first kind of got interested or heard of crypto and blockchain generally was actually when the DAO hack happened in 2016. Because one of my good friends who was working in the same office as I was with my previous startup, his company was in cryptocurrencies, and I remember the day that happened because it was literally as if the world ended. It was like the Ethereum was over, which is now, like, looking back, like, super ironic. Like, you know, it probably like lessons to be learned there. And then yeah, kind of like over time I started getting like closer and closer to it and dabbling around in it. Obviously the sort of all of this, like the madness from 2017 definitely pulled me in more. And yeah, and then when my last company was acquired, I started sort of talking with my now co-founders. So that was almost 2 years ago, around sort of working on different stuff in the crypto space, and it kind of pulled me back in. Because yeah, what I like about crypto the most is it's this sort of really great combination of really cool technological innovation, but it's also mixed with, because I studied like economics and finance, but it's also mixed with this kind of economical radicalism, or sort of a bit of like a touch of anarchy as well, which is sort of which keeps it fun.
Yeah, for sure. Definitely interesting when you combine cutting edge technology and really out there ideologies. I definitely met a lot of those in this sphere. But you started Multi. Tell me a little bit about what Multi is.
So we are a centralized exchange. To put very simply, what we mainly focus on right now is we do a lot of research. So we believe in sort of essentially offering a platform for high quality projects and helping them essentially kind of find their place in the investor community by producing research and a lot of various content about them, and just simply educating the market about this. Our second focus, which we're building out, which we're kind of will be all about, is margin trading, because we're massive believers that margin trading plays an incredibly important role in kind of the health of financial markets. So what I mean by this is that the reason why crypto is so kind of bubbly is because the current kind of like spot only markets, especially when we look at relatively low cap like altcoins, is that you can't actually short these assets. And so you end up with a lot of kind of like assets sitting unproductively, and at the same time no one can actually take like a short view, which actually, if you look at even empirical evidence, for example, then essentially the ability to short leads to healthier price discovery, which then leads to like improved liquidity and so on. So it's a win-win all around. And that's what our goal is to ship in Q4. So hopefully actually in the next sort of 6 to 8 weeks, fingers crossed. Mm-hmm. At the moment, hard at work towards that.
Yeah, for sure. I can imagine it's not easy to program and set up. You want it to be stable and secure. But let's break down those 2 points one by one. First, let's start off. You mentioned you guys are very big into research. Does that encompass the entire exchange? As in, how do you find in those projects and tokens to list? Do you guys heavily research, or do projects and tokens come to you guys and then you filter them whether to accept them onto the platform?
So today, to be honest, today we're still we're incredibly early stage. We've been live now for about 2.5 or 3 months, and we're still making a name for ourselves. And what we what we do is, because a large part of our team is kind of sort of crypto native, so we kind of live and breathe the space anyways, and we naturally love kind of like staying in touch with this, so it comes quite naturally for us to sort of just to be able to just stay informed in this kind of madness that seems to just keep turning and going 24/7. And yeah, because we are well informed, we stay informed, and we kind of it does come naturally. And so far we have been kind of doing a pretty good job at kind of making a name for ourselves around so far around our research.
Mm-hmm. And so, how does this research benefit the end user? I mean, is it just to help them get a better understanding of what they could potentially invest in and steer clear to? Or, because when you think of exchanges historically or traditionally, people aren't going there for the research. How are you guys going to set yourself apart? Like you mentioned, you guys are crypto native and you already have your fingers on the pulse. How is this going to help the end user of the exchange?
So I guess it's kind of two parts. Firstly is the kind of is the brand that we want to kind of build around it. But secondly is also the the type of customer that we want to acquire. So we want customers that are kind of interested in educating themselves a bit further, and that are curious about, want to actually understand, what does this project do, what's the purpose of the token, does it actually get used, and just to go like a little bit deeper into this thing, instead of just purely kind of hands off the wheel, hope for the best type of investing.
Yeah. Well, that's what we've seen so far. If you could sum up in one word the types of investing that's been going on since the early days of crypto, you'd say it's speculation. It's people, for the most part, saying, I believe that this token will be higher priced than when I bought it. And it seems like you guys have a slightly different focus, where you guys are actually trying to look at the project itself. You're trying to looking at the team itself and saying, will this token actually have a use case? So do you foresee that the crypto markets have matured to the point where people are I mean, obviously they still will, but are shifting away from that, mere speculation, this price spike way of investing, more to, hey, I want to invest in actual solid projects?
Definitely, yes. I think the kind of the aftermath of that, like the reality check that 2017 and 2018 kind of brought, was followed by this period of darkness where no one trusted anything or anyone, because it seemed that the entire world turned to be, or the entire crypto world seemed to be kind of just lies. But now I think it's sort of definitely there has been a kind of very dramatic shift in education that people do, and how much attention or focus gets put behind, or is this thing actually legitimate? Is it actually possible? Is it needed? Are these claims actually can we somehow verify them, or can they be are they actually based on anything? Does this make sense? Like obviously these questions, none of these questions kind of got asked in 2017, but now definitely we see how it really has matured. I guess now in the last couple of months, the entire sort of what we like to call this Uniswap gambling type of thing has sort of come back, but it's still in a different format, that we don't have these companies or projects raising tens of millions, I mean even hundreds of millions of dollars off of sort of like a pipe dream of I don't know, decentralizing the dentist industry or something like that, right? That sort of stuff. That was I think a lot has been learned since then, but also the industry has matured, and I think what also makes a really big sort of what has given it this push towards just people being a bit more attentive is that one of the things which really got underestimated in the last sort of like bull market was the amount of time that this technology takes to develop. And which is, it's quite common that this happens, but now I feel that we're really getting to this point where for the first time you can actually build kind of like where cryptocurrencies or blockchain becomes actually usable for like, for some things. And, because there is like this kind of like this critical mass point is really starting to happen where there's just enough kind of, different interconnected kind of like services, tools and stuff that you can start, putting something together. And that's, I think, like really, really fascinating.
Mm-hmm. Well, when we're looking at, so far, the usable coins and tokens so far have been, for the most part, stable coins with DeFi. Those seem to be having the most use cases right now in the crypto sphere. But for those, I mean, you're not really going to exchange to buy stable coins. Do you see that we'll see a shift away from that? We'll see a shift towards, kind of utility tokens that also that aren't stable in value, that actually their price rise and falls based on their usability?
So the usability side, honest answer is kind of, because like today still like the price action itself is still really, really heavily driven by the sentiment. Like and it should be as well. It's still like it's an industry that is in such a kind of early stage that the kind of the growth potential makes up essentially like 99% of the valuation. So it really also wouldn't be fair to do any of this sort of like some people do these like price earnings ratios of different like protocols. Yeah, I mean, it's nice to kind of like, try different, points of view, but it's also, you're really not doing justice to kind of what the ambition is. So I think for the time being, we will be sort of, the fundamentals are going to be kind of less, not directly driving the price, but influencing it definitely. Like for example, right now when we see the kind of I guess what you might call utility tokens, like protocols such as like Aave, which there's some proxies or like metrics where we compare these like DeFi protocol success, such as like total value locked. And as this grows, then obviously people get more bullish on the underlying token. But the thing is, there technically isn't like a common understanding or like an agreement of a fair market value of a token is X percentage of its like total value locked amount. It's still, there's still like a long road to go there, and this is fine.
Mm-hmm. I mean, I earlier in the conference I spoke to a guy who works at a traditional VC fund who he's in charge of investing in their blockchain projects for them. And he was saying how this is one of the big, this exact point is one of the big things holding back traditional VC funds and traditional institutions from investing in cryptocurrencies, is that it's so young. There hasn't really been enough data available to properly assess what is successful, what isn't successful, what is undervalued, what is overvalued, because we don't have we can't apply the traditional metrics, like cash flow and all these traditional metrics that we have in the traditional market. We can't yet apply them to the crypto market. Some because we just don't have enough data yet. It's so early on, and some they just don't apply to this very unique new technology and financial instrument. So when we're talking back about the research that Multi is going to be providing, will users kind of read it as as I want to say recommendations, but kind of as a stamp of approval or recommendation by Multi that, hey, this project seems better, you should invest in this? Or will you guys try to be as neutral as possible and just kind of give information and educate them so that the investor can make their own decision?
That's a very good question. Generally, we tend to research, or like we we research things that we think are kind of worth researching. We're also not this kind of like a short seller, shop that we kind of, we try to like debunk, stuff that, so we definitely don't do that sort of stuff. So we try to, so I guess like naturally our research tends to kind of focus on projects that are actually doing like really cool stuff. But we do always try to actually like, drill into like follow like essentially like a structure that might, help give like a full perspective on it, that, what's the value proposition, what are the use cases, and, what's the roadmap been, where are they at right now, and just try to kind of also just like show all sides of the story. So for example, and some kind of more active projects or projects that we focus more on, we also do like monthly reports on them. And there we do have like in the end, a sort of like, it's basically a rundown of everything that the project did over the last month. And then in the end, we do present also like a bull and bear case, just to kind of where that tends to be written by two different people on the team, because we have like enough people that are researching stuff. We do have some like, some people who are like incredibly passionate about a project, and then there tends to also be like someone else who's kind of the exact opposite of it. So we have a kind of we do try to balance it out, and so far I think it's been working well.
Uh-huh. And one of the problems that has faced crypto exchanges historically up until now has kind of this idea of wash trading, of faking trading volume, because of coin aggregators like CoinMarketCap, that early on in the industry kind of ranked exchanges by the amount of volume. And what that did was that incentivized exchanges to fake volume, because they want to work their way up that ladder. So one, what role do you think that coin aggregators should play in this industry of kind of directing users towards exchanges? And two, as an exchange yourself, what do you think would be the best metric for investors to pick exchanges, if not just reported volume?
Yeah, honestly, this is something that I think we should be talking more about, because so the thing around like wash trading is it's kind of first of all, it's a terrible thing, and it's so damaging for the industry, and like in kind of in very indirect ways, because what for example, like you and I who are active, we're much more informed than the really average person, on the street that doesn't know, that much about crypto. We know not to kind of, which exchanges to avoid, or mainly kind of like which are the sort of like, the few legitimate exchanges. But the thing is, like, most people or anyone that is entering crypto today, they have no idea about this. And like, now imagine like how many people have completely, basically written off cryptocurrencies as an investment, because they've essentially been scammed by an exchange that just that has kind of like bamboozled them into signing up. And and that's why it's the biggest problem, because all of this this fun and games that we've been having, for example, this year, that there's tremendous like innovation and so on, but this is all kind of it's not for like a particularly like great reason if it's not followed by actual adoption for it. And like this, it's such a kind of what's the word, like impediment for adoption, that if we don't kind of manage to clean that stuff up. And it's and it's kind of like one of those things that, like you said, that they used to measure the kind of, let's say, quality of an exchange by the trading volumes, and which was fair, but it turned into this kind of like if essentially you impose a rule, then the people that this rule gets imposed on, they will start acting to meet this rule. It's not it's a the trading volume is a proxy for quality, right? So they're going to try to so what can they do then, and then that's when they start fudging their numbers. And yeah, I think one of the things which I guess you mentioned, like, what could the coin aggregators do? Um, that's it's a tough job. Like, it's hard to say that, they should just kick them out, because it's, as I also know that it's not it's kind like the wash trading world, it's kind of black, but there is also like some gray sides to it, that there are like some exchanges which apparently might sort of like accidentally do it, or just like, there's some like strange cases as well. And this, we're talking about like really, really major exchanges, like sort of like, they're kind of like top 5 that are still, accused of, or that basically just like the numbers don't seem to make sense. And so you can't also say that, that they should be everyone should be blanket banned for this, because it's also not really the core business of the coin aggregators. And it's and I know that they try to sort of they try to not be like a completely like a curated sort of place, but their goal is still to their position is, maybe this is a bad example, but their position is kind of like, like Facebook is like, we're for free speech, right?
Right.
And but they do, like, some, like CoinGecko, for example, is one that they have been really like trying to sort of I think to impose new metrics. I'm not sure how aggressively they actually kick out like fraudulent or sort of exchanges that manipulate with their numbers. But what they have done is they try to introduce more metrics that kind of help a customer to to either make the right decision or not make the wrong decision. So and I guess you asked like what's a good way to look at that. Then so CoinGecko has this, like, you can see a plus minus 2% like order book depth, which that's, I think so far it's been an unfakeable metric. Knock on wood, it's I mean 100% it's not going to last forever, but it's kind of like it's a constant game basically, right? Because you have bad actors who are sort of how to say, I mean, essentially lazy and uncompetitive, they're not competitive anymore, and you kind of in this and I guess unfortunately due to the nature of this our like fully online industry, it's incredibly easy to to do this sort of stuff with too little repercussions.
It's kind of, I don't know, funny or ironic, I would say is a better word, that a big problem in the industry of blockchain, which is an open, transparent, distributed ledger for everyone to see, that one of the problems would be knowing how much volume is actually going through it, when all these things are open, and obviously they find ways to fake it. But I do find it ironic that this would be one of the issues that we're facing as an industry. But now that we're talking about the market right now, and it is maturing, it's still early on, but I wanted to get your take on the market today, because we are in a bull run, and some are attributing this to the COVID-19 and the resulting government stimulus. The governments have printing money all around the world at record rates. Do you think that this is that big push? Do you think that people are finally saying, opening their eyes and saying, hey, we can't trust the government when it comes to managing our monetary policy. We have to turn to decentralized currencies like Bitcoin, like Ethereum, that can't be manipulated by governments?
Well, I think the honest answer is that there isn't a one singular kind of reason for it, but I do think that if we did have this this case that so technically Bitcoin was born out of the kind of the depths of the previous financial crisis, and right now should tick essentially all of the boxes for Bitcoin to kind of to already be going parabolic, but it hasn't for some reason. The altcoins at the same time have, this is where it's been a complete party. I think but at the same time, I think the reasons behind this bull run are definitely like the macro environment does have a massive effect on it, because at the same time also like the stock markets have gone like completely haywire as well, in terms of like only going in one direction. And then combine that with COVID-19. I can't really comment on like the stimulus check side, but the fact that people are sitting at home, and there's like, there's limited, amount of hours that you can, continuously play, PlayStation or Xbox. I know it's a fairly large amount, but like, this COVID-19 has been lasting for quite a long time. On top of that, there's no sports betting right now, hasn't been for a while. Okay, now it's like in some parts it is back, like football is happening and so on. But I think all of this stuff also kind of like contributes to it, that there's just so much kind of retail like activity. But in terms of like the size of this current like bull run, it's not actually very large. Like we haven't hit like any form of like retail masses flowing in, because if we look at the total market cap, I think is at about 300 billion right now, that is not that large. It's, we haven't even gone up that much technically yet. So if we were talking about, actually kind of, masses of massive amounts of money flowing in, that's not happened yet. That being said, I am incredibly sort of, I mean, obviously, super biased, but also, very sort of bullish on what is happening right now, because I do actually believe that this is, that sounds great when you say it, but this time is different.
Every time, we say that every time. Let's hope this time it's true. But yesterday, Whale Alert actually put out an alert saying that over $30 billion worth of cryptocurrencies have been transferred from wallets to exchanges over the last week. And the last time we saw an inflow this large from wallets to exchanges, we saw a huge price correction. Do you think that whales are getting ready to sell, and this is, when we're going to get that pullback?
I honestly don't know. I know there's a lot of people that try to kind of predict that and so on, but I think it's as much as I've understood, kind of like it's a bit too big to kind of, to be so incredibly like coordinated. Yeah. I know, everyone is incredibly happy about the, what the state of the markets in terms of, but I definitely don't sense a sort of that there is like a feeling of is this all like overheated. There's definitely some kind of like very foolish sort of stuff going on, but it's still in the kind of very like, it's mainly happening on a very, very like small scale, where when something that really is worth absolutely zero ends up being worth like $10 million or something, which is very different from, for example, something that, should be zero ends up being, or should be, $10 million ends up being $400 million. That's a much bigger kind of problem. We have seen some stuff completely blow up. For example, like Ampleforth was one, which was this kind of dynamic supply, technically stable coin. But I mean, hopefully, and DeFi has had some of its kind of lessons as well, where when YAM, which was this, I don't even know how to describe it, kind of like Farmville for money. Basically, there ended up being a massive bug, and that was actually the reason which completely clogged Ethereum for like 4 or 5 days, I think. And it did blow up. Hopefully, it kind of calmed things down for a bit, but let's see. I think crypto out of all industries is not known for its long attention, long memories.
For sure. Now let's go back to what we were speaking about before with margin trading and that trying to really base its business or focus on that margin trading. what would make margin trading unique to Multi? I mean, are there no other margin trading out there in the crypto world?
No, absolutely there is. It's in no way something that we've invented or anything like that. Our goal is to is to offer it to on coins or markets that it's either not available today or it's available but in extremely sort of like limited kind of capacities. So like our goal in terms of like margin trading is to offer it on every single or more or less every single token that's listed on our platform, have a solid risk engine in place, and really sort of deliver the best possible like trading experience there. And then on the other side of it, our margin trading is built with, because obviously margin trading essentially means also it has a lending component, and there's a kind of there's I guess two ways on how to do it. Our approach is that the loan books are peer to peer, which means that when I, for example, I want to leverage long Bitcoin with, let's say I want to leverage my $2,000 5x into $10,000, then I take a $10,000 loan from someone else on the platform and pay them an interest. And this is what we believe is kind of, it's again, not the first in the market to offer this. Bitfinex is the biggest exchange to offer it in this way. And we believe it is the kind of the best way to offer it. It's a pain in the ass to build out because it is it's incredibly complex, but at the same time, the end result, it gives you such a kind of powerful like base to then like build potentially kind of like complementary services on top of it and so on. Because the way we see it is that like the margin trading is there's a lot of demand for this by kind of slightly more experienced traders, but at the same time you do have as the margin trading side grows, you have a constant need for more lending assets, and there is a kind of also ever growing in this sort of like zero yield environment and zero yield in the fiat world. There is this like ever growing demand for essentially for like deposit yields or like lending yields, and this is where we see that you can actually kind of acquire two different types of customers, but it can be very, very synergistic, and then ultimately down the line at some point when the lending customer wants to buy something or to trade something, then obviously you would be the first exchange that they do this at. So there is kind of that is one thinking we have around that as well.
And do you see that as potentially being a major onboarding to crypto that no one really thought would be, if you'd look back a couple of years ago, and no one really thought would be the source? This idea that right now in the fiat world, there's like 0% interest all over the place. And so now someone who wouldn't want to necessarily invest in Bitcoin or isn't interested in crypto, but would say, hey, I do have this money and I do want to earn interest on it. It's doing nothing for me in the traditional banks. Maybe I'll take it over to the crypto world, not necessarily to buy Bitcoin, but to lend it out to get interest on it.
Yes, technically yes, but we specifically would not immediately be the ones that kind of onboard these completely new people into crypto, because today as it stands, we still see like there's like we haven't kind of conquered enough of the sort of crypto to crypto trading market. What we do see as a definite, or what we have been sort of talking to some parties about is essentially that on a more like institutional basis to essentially to partner with someone that does have the proper kind of licensing and regulatory like arrangements in place, and a customer base in a specific geography. Because like for us as it stands, we have customers from like over 30 or 40 countries today. We're still very, very early stage, but we definitely in no way there hasn't been formed like a key geography for us. and because the thing with fiat is that you need to be and you want to be regulated. That is kind of, that's a decision that and it's country specific. Crypto doesn't have borders technically, but once you touch fiat, then borders exist. So we're still a bit like a couple years from there.
And when the margin trading does launch on the platform, what kind of leverage could traders expect to see?
So we have no intention to kind of to cross into this kind of what you see like the maximum available leverages in the industry. Like, so maybe like in futures trading, like, you can go 100x, then someone one-ups it by 101x, and I think now Binance allows 150x. That's incredibly damaging, or like, that's dangerous. Like no one should take 100x leverage on, 100x leverage on Forex is kind of, that's something, that is like, can be reasoned, but like on arguably like, one of the most volatile assets, it's just, you can't possibly be a sort of, be like a sophisticated investor, or like, make kind of informed decisions there. So we believe in kind of, our goal is, to not to basically give our customers an insane amount of leverage and so they get liquidated, because that's lose-lose. So basically, coming to your question, between 3 to 5x, that's where we kind of we see that no one should realistically need sort of more than 5x leverage. But it does really depend on the underlying asset though as well, because if it's and that's due to like our focus on these mainly like smaller cap stuff, which are less liquid. And so we do need to be a bit more conservative around our risk engines there as well.
Mm-hmm. And that's an interesting point. Why did you guys decide to focus on these, smaller coins, these smaller caps that have lower liquidity? Is it because no one else was doing it, or you actually see that there's added value in focusing on this?
Essentially, yeah. So basically both of what you said. First of all, we saw that this is the like the low hanging fruit, because the exchange landscape is it's very hard for like a small coin to get listed on a legitimate exchange, and what we saw was that there was just so many of these coins that were kind of, they didn't really have a kind of a home per se, and that's where we kind of saw one of the opportunities. And yeah, second of all, is just we kind of naturally like the sort of the excitement and the sort of like, that every project is new, they're solving like a different problem, and it's a bit kind of it's more fast paced. It's definitely more chaotic as well, but like but yeah, that's kind of just, we kind of we like the altcoin world.
And where did you come up with the name Multi?
Good question. I wasn't the one that came up with it. It was my co-founders, and I think it was honestly, like the process of coming up with a name nowadays is you kind of it needs to be you have basically a set of like criteria, and like you can't really go for something like Apple anymore, because it's more like, you're kind of factoring for stuff like, the uniqueness and how applicable it is, and then I guess the basically like, is it available? Can we get it? How much is the domain?
Right. So, how good will it do at SEO and
we picked a kind of a slightly tougher one, but we're getting there.
Okay. All right. Well, we touched before upon DeFi and the yams, and kind of how immature it is, but it, there also holds a lot of promise there. So when you're kind of looking at DeFi, which project excites you the most?
So I'm a I'm a big believer in Thorchain, which is this is something it's one of the first projects we kind of started covering with our research as well, which is Thorchain is it's like a cross-chain Uniswap. So it's kind of these like AMMs, or like liquidity, like decentralized liquidity pools, but the ambition is to broaden the reach from not only Ethereum and ERC20 tokens, but actually to so specifically to Bitcoin, and then down the line connected to other chains as well. It's very cool. That's one. And what else do I really like? So Aave is one which we've been sort of following as well since earlier this year. That has been like absolutely killing it. And it's and what is very cool, because it's actually kind of, it's a protocol that's actually being used, and that's what's kind of what excites me sort of the most, is trying to sort of, maybe not the stuff that promises to, to put a man on Mars like 10 years from now, but something that is actually, is slowly but steadily showing like actual kind of, traction and product market fit, I guess.
Mm-hmm. And, you mentioned decentralized liquidity pools, and, as an exchange, you want liquidity, you need liquidity, the users want liquidity. Do you see potential for exchanges, in specific coins are lacking real liquidity on their exchange, to kind of in the back end implement, attach their own liquidity to a decentralized liquidity pool to kind of boost their own liquidity pool, so that the end user still gets that same great centralized exchange experience, but is still getting access to that added liquidity?
Yeah, 100%. I think that that will happen. I think it's in some ways it is happening right now. Like, there is being some stuff like announced. It's still not like that like a large, a lot of exchanges plug into like some kind of global pool. So it's still it's a bit early for that. But yeah, definitely that will happen. It is actually something that we are also kind of looking at, or sort of in some ways kind of want to experiment with, because like the way we see it is like, like the crypto industry will hopefully grow very fast. DeFi will definitely, and the sort of DeFi and the specific like decentralized exchanges will definitely grow faster than centralized exchanges. And if we kind of talk about which like, both will always exist, but there's kind of the where more innovation lies, or where there's more room to innovate, is probably on the decentralized exchange side. And we kind of our sort of ambition is to kind of is to always really kind of keep like pushing ourselves to limits there, and try to sort of try to find ways of how do we sort of like kind of integrate or blend our like decentralized exchange into DeFi.
Mm-hmm. I hear that. I mean, like you said, developing all these this back end, like you mentioned, developing the margin trading is incredibly complex, and so and I could see a future where centralized exchanges do, like you mentioned, go to the DeFi tools that are working, that are already developed, that are mature, that have been used, that have been tested, and kind of plugging that in to the back end to supercharge their own centralized exchanges. I think that does hold a very cool future. And we spoke a little bit upon this, where I mentioned on the onboarding for fiat, and you mentioned how that is really a regulation headache, and you guys are more focused on getting that crypto to crypto. How do you view and the fact that you say that? It proves a point. It proves a problem, that right now it is a headache. Right now, the regulation for crypto, especially for fiat to crypto and crypto to fiat, it is a mess. It's totally different for each country and for each geography you're in. The rules are all over the place. They're unclear. Do you see that changing in the future, though? Do you see a point in the future where governments realize, okay, we're not going to be able to stop this thing. This technology is adopted enough and mature enough and useful and better that people want it, people are using it. And instead of trying to fight it and kind of having this craziness regulation, they're going to get together and just like crypto is borderless, they're also going to streamline their regulation so that won't be a headache, so that there kind of will be a more streamlined regulation there as well.
Not really. I don't really see that unfortunately happening in that way. Reason being is that is because the state of the kind of as you mentioned, the regulations are so they're not cohesive or coherent or cohesive, whatever the word is, and it's not possible to meet every regulation, like every crypto regulation in the world, because they even contradict each other. But the thing is, they haven't deliberately been written to be bad. It's more that that they haven't kind of managed to come out with the right policy to sort of to actually achieve the outcome. And in this case, the outcome is still is consumer protection, which and that serves a purpose, but it always needs to kind of balance out that it doesn't become too kind of onerous, and that it doesn't become that essentially turn this into kind of the state of banking in Europe, for example, today, where it's basically getting to this point where it's over-regulated and it's not really it's not the same business anymore. The purpose of the business should not be regulation. It should be regulation it should be the hygiene of it.
Yeah.
So yeah, but in terms of that it'll will it. I mean, maybe it'll be cool. Crypto does tend to kind of I guess maybe something like that happens. The kind of the unimaginable.
Right. I can only see it happening if CBDCs do actually become widespread and every government has it. That's the only way I could even see it becoming close to plausible. Because otherwise it's just too hard to interconnect everything. But that kind of brings me to my next question, where so far, there's been a lot of progress in blockchain and in crypto in terms of innovation in the underlying technology, in terms of how stable it is, how fast. It's all about how many transactions per second and the low cost of transactions and how quick the finality is. But up until now, there has been, it seems like the UI UX lags behind. It seems like, and that's okay. I'm not knocking it. You kind of do need, the technology to be there before, you can make it usable. But at what point do you see that? Are we at that point yet? And if not, when will that point be where the cryptosphere and blockchain, they stop or they shift some of their focus from just moving forwards, innovating to making what we have now more usable and accessible for the everyday user?
Well, first of all, it's definitely not happened yet. I mean, there are some of these things that are just kind of unimaginably complicated to use are because of some essentially technical sort of stoppers, such as with Ethereum, for example. Everything you do on it, you do need to pay gas, and you do need to kind of authorize the payment of this. That you can't have that sort of seamless of stuff. But some stuff is just, and this is I think it's definitely improving, and it's improving kind of faster and faster. But there's still such a long way to go in terms of just developers, just spending even a little bit of time on, talking to a user or talking to a customer, because honestly, most of these protocols, they are they're made for a machine to access via an API. Like, the front end is such a bare minimum. Like, even on some like really, really large protocols where there's millions or tens of millions, hundreds of millions moving through, there's not a single tooltip, for example. Like, how am I supposed to use this for the first time? Like, how can a product get a really, really large number of users if the way to use it is you need to figure it out on YouTube? Like, that's not, why does it have to be this way, right? So I think, definitely there's work to be done there. I have wondered whether it's like a conscious decision from the developers that maybe, it is still like super experimental. Like, do they even, do we need to be ready for, for this, for like, this kind of avalanche of retail users? Because I mean, retail clients bring sort of retail issues. They they forget their password. They don't read what's on the site, even if you put it there sometimes. And there's a lot of sort of stuff that involves that, and I guess, like, protecting your keys is something that, I mean, even the kind of smartest of us manage to like mess that up sometimes.
Is this something that Multi is focused on? Is a good user experience, good interface for its users?
Oh yeah, for sure, yeah. So this is something we are kind of, to us, it comes like quite naturally. Like, we do really, really sort of like prioritize kind of intuitiveness of the platform and like UI and UX. We do really, really prioritize that. That being said, some things are still pretty hard to sort of it's a lot harder simplifying things than to to make them complex.
Yeah, for sure. I mean, especially like you mentioned, there are some things inherent to the technology that just impede the smoothness, the simpleness of using it, and that kind of ties in to another idea of not just easy UI UX, but it seems like if you look at the numbers, most people in the world nowadays, for the first time since the invention of computers, they interact with the internet, with computing through their mobile device. That's the majority of web surfing, majority of video watching, of everything is now mobile. But yet it seems like most things in the blockchain are developed and geared towards desktops, laptops, non-mobile experiences. Is that something that is kind of inherent to the technology because it's very computationally intensive, that it kind of needs a desktop? And is that, are we going to see a shift to more mobile-based blockchains, more mobile-based exchanges? Will Multi have a mobile app that users can utilize the exchange with?
Yeah, 100%. We are going to have an app. In terms of the mobile usage, that change actually it is like really, really heavily already happening. I think there was a number of reasons why it's because, for example, like all of the kind of or very few of the sort of the leading, let's say, like let's take an example, like the couple of like DeFi wallets that we have, or like the wallets where you can kind of interact with other like different projects on the blockchain. Those tend to, almost all of them, be on mobile. I think the reasons behind that is there were some like technological stuff around. So for example, like once, I'm not an iOS developer, but I understand that once Apple essentially opened up the can't remember what the name of it was, but essentially allowed the app developers to store private keys securely on a phone. That kind of opened the sort of so many more possibilities to actually build these sorts of applications safely there. So there were some like technological sort of like reasons holding it back, but also like initially it's just it didn't need to be on mobile as well. That it was still like, if it's not really that for sure that the thing kind of like works perfectly anyways, then no need for a mobile app on top of it as well. Because I mean, stuff like MetaMask is, it's built for desktop, and it works great on desktop. And and then I think the other side is just storing private keys. It just doesn't work the same way on mobile.
And last question before I let you go. What should users expect next for Multi? What's the next big milestone that we should be looking out for?
So definitely our biggest milestone that we're gearing for is margin trading. So we hope to launch that in the coming months, hopefully sooner than that. But in the meanwhile, we have a lot of research that we are sort of producing regularly. Going to be listing a lot of exciting coins, and we do plan to. Can't announce a lot of it yet, but we are sort of in plans of or in process of releasing our token as well, which is kind of I can't go into detail what the exact thing is, but for us, like why we want to release a token or launch a token is not necessarily to because it's the best way to raise capital, but it's actually what we like. For example, what we talked about before about how you build kind of community first. You ship products that your customers care about, that you offer a great market for trading. You offer a product that is needed, but the thing is, and if all your customers sort of like love your product, then the token is what's it's the perfect thing in crypto for a crypto exchange, for example, or anything, is that it allows you to give your customers essentially upside in the kind of in the success of the actual exchange, which and that really kind of like ties the loop into where your customers actually kind of become your network for your like true like ambassadors, because everyone is kind of incentivized and everyone wins. So that's sort of and we do have, I think we have a lot of sort of interesting stuff planned.
Well, very excited to see it all. Very excited. I know that you're limited what you could say, but very excited to see what comes out of Multi. It sounds like a great project. Artur, thank you so much for taking the time and speak with me today. And for all our viewers at home for Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.